When it comes to investing in the metaverse, you might have considered focusing on one of a few options. This could be metaverse-related stocks, the native cryptocurrencies of metaverse projects, or even individual virtual real estate properties within a given metaverse. However, given how early we are in the metaverse narrative, all of these choices lack the diversification I would want to see in a metaverse investment. It's just too early to pick the best long-term metaverse play. Then I found the cryptocurrency project MREIT, or the MetaSpace Real Estate Investment Trust. This project is combining the high growth potential of the metaverse with the diversification and regular income of a traditional real estate investment trust. This video is not sponsored or paid for in any way, and in fact, I don't even own any MREIT tokens at this time. However, I think this is one of the most interesting metaverse opportunities out there, so I wanted to cover it for anyone who may be interested in a metaverse investment and to give some attention to the project for doing something unique. So in this video, I'll cover the MREIT project, starting with how it's bringing the popular REIT model to the metaverse. We'll also take a look at the tokenomics of the project and where to buy it if you're interested. However, MREIT is still a very new project and has some important risks to be aware of, so we'll wrap up with those at the end. Let's take a look. First, we have to start with the MREIT strategy, which is best explained through the traditional REIT structure. In traditional markets, REITs are real estate investment trusts. These are investment funds that acquire a portfolio of real estate properties. As they collect income from renting or selling these properties, they reinvest that income back into the business and pay most of it back to investors. REITs are particularly attractive to dividend investors because they're required to pay 90% of their profits to shareholders in the form of dividends, and therefore generate pretty high dividend yields. Of course, the value of shares can also increase with the underlying property values, so you can enjoy both the income and growth that comes with the real estate market. MREIT is doing almost the exact same strategy with digital real estate in the metaverse. The key difference, of course, being that if this metaverse narrative plays out like some think it might, these digital properties could appreciate much more rapidly than traditional real estate. And if you are wondering, the founder and CEO, Eric Klein, does have actual real estate experience. Time will tell if that translates perfectly to metaverse real estate, but it is cool to see that it's not a completely new endeavor for him. Of course, the first step for the MREIT project is acquiring metaverse real estate, and they will do this through the MREIT token. This started with venture capital funding through Unicrypt, where they raised $25,000 to fully launch the token. They further kickstarted the project through KleinCap, a private equity firm also owned by CEO Eric Klein. This has given the project some liquidity to work with for early acquisitions, while also releasing a total of 23 million tokens for trading, initially on PancakeSwap. While this doesn't give them a ton of cash to work with initially, the path to growth is pretty clear. As more investors purchase MREIT tokens, the price will go up given the limited circulating supply. This increase will lead to greater liquidity, meaning that the MREIT team can sell tokens from their treasury or holdings with minimal price impacts. Then, they can use those funds to purchase more metaverse properties, with eyes currently on the Sandbox, Decentraland, Somnium Space, Cryptovoxels, and Upland. The purchase of properties should add value to further stabilize the token price, since each token gives you partial ownership of the underlying metaverse portfolio. Eventually, the token should trade pretty close to the price of those underlying properties. And this is part of the appeal of the REIT structure. Now, through MREIT, investors can buy into a portfolio of metaverse properties for less than $1, instead of saving up thousands of dollars to purchase digital property themselves. But beyond the influence of investors and traders, MREIT will also generate income to purchase properties through partnerships and other activities. And for that, we have to understand what MREIT plans to do with its portfolio. First is renting its virtual properties. Using the rentable platform, they can rent out individual properties in the metaverse for regular income. Next is advertising. With the purchase of billboards and other virtual locations, they can sell placements to brands for recurring revenue. They also say they're going to create NFTs and metaverse projects that will give users access to real-world locations. Additionally, they plan to create digital workspaces and co-working environments, which again can be leased or rented to interested parties. Finally, if a property has appreciated and they want to reinvest that capital elsewhere, they can sell properties to adjust their portfolio. All of these strategies will give MREIT funds to reinvest into the portfolio and acquire new properties. And the best part is, this benefits token holders beyond just getting exposure to the new metaverse real estate. MREIT has outlined a clear formula for how their profits are allocated to the project. 60% of all profits are reinvested into the portfolio of metaverse properties. This is directly going to drive the value of the MREIT token higher as more properties are added, so it's great to see such an aggressive number going back towards the project itself. 25% of the profits are given back to token holders as quarterly rewards. According to the white paper, this reward amount is calculated based on a holder's percentage of the current circulating supply. Profits are then converted into the MREIT token, which will create quarterly buying pressure before being distributed to its holders. It's also interesting to note that you must hold MREIT tokens for at least one full quarter before becoming eligible for this reward, which encourages long-term holders and prevents anyone from gaming the system to get free rewards. This is much like the structure of a traditional REIT, and again, it's quite an aggressive structure to reward token holders, which could be very appealing if the project is able to generate substantial profits. With the remaining 15% of profits, 3% goes to the team, 2% goes to legal, and the remaining 10% goes to marketing and development efforts. They also have staking on the roadmap, but with no other mention of it on the white paper, it's tough to say how this will play into the potential returns or the greater tokenomics. So with that, let's take a closer look at the tokenomics. Out of a total supply of 500 million tokens, 378 million have been locked in the project's treasury until January 2023. Unfortunately, we don't have any further information on whether all of these tokens will become instantly unlocked in 2023, or if they'll unlock in phases. Nor do we know what function these treasury funds will actually serve in the future. 8 million tokens have been burned, and another 80 million tokens have been allocated to the team and their partners. Interestingly, some of these unlock throughout 2022, at the rate of 3 million tokens each quarter. But again, we don't know what they will do with these tokens as they become unlocked. There are currently 23 million tokens in circulation, and with the current price at the time of writing around 25 to 30 cents, this gives us a circulating market cap of roughly $6 million. That is an incredibly small market cap, meaning the MREIT token will be highly volatile, which has its pros and its cons. So now is a good time to discuss the risks of the MREIT project. As we said, with the current tokenomics and price, this project is going to be very volatile. The low market cap and low number of coins in circulation means that large buy and sell orders are going to cause massive price swings. This could be good if money flows into the project, but it could be equally disastrous if money flows out of it too. Similarly, the low number of tokens in circulation leaves a lot of room for token price dilution as new tokens get unlocked and released. Unless there is increased demand for the token as new tokens begin circulating, the price of MREIT will drop in proportion to the new circulating tokens. 12 million tokens are being released in 2022, so the circulating supply is already going to increase by 50% this year. Then, over 370 million tokens get unlocked in 2023, with no clear guidance on how any of these tokens will be used. I would personally like to see a lot more detail regarding their plan with these tokens once they get released, because if there's no buying demand, it could tank the token price pretty quickly. Finally, it's pretty clear that the MREIT project is still incredibly early in its mission, and keep in mind they just launched in December of 2021. But as of the end of March, they only have one Metaverse property acquired, and this is a MetaSpace HQ in Decentraland, which occupies 3 plots of land. So if you want that diversified exposure to Metaverse real estate, you aren't getting that just yet. I'm also worried that the lack of liquidity and low market cap doesn't give them enough capital to work with to acquire new properties. And unfortunately, they've been super vague about upcoming acquisitions. There are a lot of teasers about upcoming PR, acquisitions, partnerships, and more in the Discord, but nothing concrete to go off of yet. Overall, the aspirations for this project are super impressive if MREIT can accomplish them. And if the metaverse is going to be as valuable as they say, this could be a great opportunity for both growth and income. But for me, the risks are too great until we get more clarity from the team regarding tokenomics, or at the very least, we see more official land acquisitions and partnerships. If you're interested in buying some MREIT tokens for yourself, it is currently listed on Uniswap v3. To purchase it, you will first need to copy the token address listed on their website or white paper. After launching the Uniswap app, you'll click Select a Token and then Manage Token Lists, and then click on the Tokens tab on the top. Here, you'll paste the MREIT token address and add it as a custom token. At this point, you can choose it as a token to swap into and then trade into it from Ethereum. Of course, you will also need to have a MetaMask wallet or another supported wallet to execute the trade. But that's everything there is to know about MREIT at this time. And if you have any other information or thoughts on this project, I'd love to hear from you in the comments below. As always, be sure to click the link in the description to get $50 of Bitcoin for free at Celsius Network. And check out my previous video to see why I put $1,000 into the Juno token, perhaps one of the best opportunities in crypto right now. I'll see you next time.